Hello, Brian Shannon here from AlphaTrends.net. Today's Saturday, the 29th of October 2011, and the market was kind of flat on Friday, just kind of digesting a little bit of that move from Thursday. This is the real big move that is. And if you look at this market, what it's done is it's been pretty remarkable here over the last month or so. In fact, people are saying that this is the biggest month percentage-wise since 1974 for the S&P 500 and the ninth biggest percentage gain on a monthly basis. Let's take a look at that monthly chart actually to put that in perspective. You can see that giant green candle here, and the way it came was pretty remarkable. That is that we were observing and thought that this was the possibility of from a failed move could come a fast move. There was a lot of skepticism about this rally because of the volume, but the price kept marching forward right up to this prior level of resistance, and then we had a nice time correction in here where the market went sideways for about 4 or 5 days, and then obviously it began to move higher once again from these lows here at the I guess this is October 4th. The market from the intraday low to Friday's close, the market's now up 19.7%, and that's just 19 days, so 1% a day basically. Just a remarkable run for the market, and it continues to act healthy. It's making a pattern of higher highs and higher lows with prior resistance levels becoming support. And what we want to see hold, I think, for next week would probably be near about this 125 to 125, 124.80 really, up to about 125.80. These are two potential levels that this market could pull back and kind of hold. Worst case, if we got a deeper sell-off, I think we would want to see about 122 and a half hold. Nearer term, let's take a look at the 10-minute time frame. Friday's lows, if we break that, then we probably will head down towards about that 125.80 level. So we've got, let me make that clearer, about 170, 127.80, then 126 basically, and after that the next level would be looking forward about 124 and a half. And again, the bigger level is that we want to see hold is about 122 and a half. Otherwise the market continues to do real well. This and this is why we talk about prior support has the potential to become resistance. We don't, a lot of people will say, well, the market has resisted. Last week they would be saying the market has resistance at 126. The market had the potential for resistance at 126, but obviously when we gapped higher on Friday, we pulled back, and then or Thursday rather, pulled back, came down and tested that level, and then just marched higher from there. So we remain above the 2-day volume weighted average price, and you can see Friday's pretty narrow range in here, but there was a lot of great action in the individual names. I had mentioned on Twitter that I thought a lot of the stocks have been acting a lot better lately, and obviously it's due to the fact that we have such a strong trend, but it doesn't seem as though we're getting those jerky moves back and forth, that we're seeing stocks make a move and hold on to those gains. That's what I meant by that. So there's no reason to think that it can't continue higher other than the fact that we're up a lot in a short period of time. If we do continue to move higher, well, this has been an important level, and I didn't draw that correctly. Just above here, actually. Let's see if I can just grab a hold of that, and I guess I can't. So I will redraw it. Hold on. What's going on here? Um, Anyways, here's what I want to do is just grab that back up and say, we came up to this level, and really 130 is an important area for this market. We fell a little short of that this week, but 130 is a potential level of resistance. It was this prior support which turned into resistance, and then was trying to hold there once again. So 130 looks like an area where it's likely to, and you ask yourself the questions again: where does this market come from? Where does it have the potential to go? Well, it's come just 19.7% in 19 days. It seems as though it should be due for a pullback. Where does it have the potential to go before it's likely to encounter resistance? Well, at 130 we've got this level. So it's saying basically the risk reward for the market doesn't make sense to be buying big positions, but the trend is still higher. If you're gonna buy up here, you want to keep your risk based on tighter stop parameters. Obviously, using Friday's lows and that sort of thing. The Nasdaq was up 9 pennies, and this market continued. Let's take a look at the monthly chart on there. It's not quite as dramatic, but you can see that green candle does stand out quite a bit. We had some much bigger ones back here in 1999, 2000, and it looks like the biggest monthly gain for quite a while, and we are right up at the top end of the range for the highs of this year. And obviously that would take, breaking past that would take us up to levels not seen for a decade, basically. So the Nasdaq continues to behave well. It's been a little bit choppier, but it is making, two steps forward, one step back, and stair stepping higher here. Maybe a little bit choppy, but it is behaving well overall. It kind of turned a little bit more neutral looking last week, midweek, but then that gap, once again, obviously the buyers took control. So we've got a couple levels in here I think that we want to keep an eye on. This, we had this prior resistance hold a support on Thursday. So 58 is important. And then basically the midpoint in here, we've spent a lot of time at about 57.30, and then the low end of the range down near about $56.20. Otherwise, it looks like we would be testing these highs and potentially breaking out. Now, I would think that we have the potential that if we break out to a new high in the NASDAQ, that is that new decade high, that after such a big rally, and here in this case it's about what was that 14 I'm sorry 9 points, so we've had about an 18% rally in the Nasdaq. If we were to break out on Monday or Tuesday, that could set up one of those failed breakouts that sees a pretty strong pullback, because again, you're typically not going to be rewarded for buying a breakout after a market has already moved 20%. Russell 2000 is jumped beyond the resistance that we were watching in here at 73.50. That occurred on Thursday, of course, and now within striking distance of this prior support level that has the potential to offer resistance. You can see we're right at that green moving average, which here on this daily chart we've got a red is a 50, the blue is the 100, and the green is the 150-day moving average. We've got the black 200-day moving average just up above there, near that prior support at about 77.5. So that's where this market has the potential. It's likely to encounter at least a slowdown or a buyer strike up in there, but it doesn't mean the market's going to pull back. So I've seen some people saying they thought the market was going to crash. Basically, there's no evidence of any crash. We're in this nice little uptrend, and look at this monthly bar. Just an amazing month here for equities. Semiconductors were up 3 pennies. They obviously made it beyond the resistance last week, and what we were looking for was a move up to the 32.5 level, which is where we are, and we're holding above that 32.5. So this prior support is not, didn't offer any resistance in here, and this was, for a formidable level here that it had been tested as support so many times, and then we had those lower highs coming into it, more frequent tests, and that's when it broke down. Well, we broke this resistance at 31.20, and what we were looking for was a movement up towards 32.5. Here we are holding above that. There's no evidence that it's about to decline or anything. We've broken this little downtrend line with that gap you can see, and looking at the weekly chart, this is kind of similar to the Russell 2000, but it's above that prior support level. Now, it doesn't mean all's clear that it's going to just continue to move higher. What I would prefer to see is some more backing and filling, maybe pull back, consolidate, and just give the stocks an opportunity to refresh and give us lower risk entries. But right now, the buyers are in control of semiconductors. The first important level to break would be about 32.20. If it did that, I would expect that it's probably going to pull back at least to the top end of the range near 31.70. Financials have been a real star recently, and let's take a look at these numbers here. The month to date, The spiders are up 13.6%. That got the market to a positive position year to date, up 2.2%. Financials this month are up 18.97%. They're still down on the year, but if you go back to that chart I had posted last week showing since the March lows, the financials are actually doing really well. They're only trailing behind the NASDAQ. They're ahead of the S&P 500, and they're the group that gets the most bearish uh, talk and hatred really. You look at the weekly chart, or I'm sorry, this daily chart, and you see the two things come together up here at about 14 and a half. Actually, really, three things basically come together in this general area, and that would be the 150-day moving average, the downtrend line, and this prior level of support. This prior level of support is what we were talking about, that if the market could break above the 13 and a half, that it was likely to make a move up towards 14 and a half. And I said over the next month or two, I wasn't expecting this quick of a movement. The weekly chart, if we can kind of change the scaling in here, this is, we're down pretty good year to date. Those are where we closed last year. Um, but obviously making back a lot of that lost ground, and breaking the 1350 occurred on the gap. It was acting healthy prior to that though. The 13 level broke his resistance a week and a half ago. It's been holding his support along that rising 5-day moving average. So it was a nice pattern of higher highs and higher lows. And then obviously we had that big gap higher, which cleaned out a lot of short sellers. And now I think on Monday, early next week, we want to keep an eye on 1380. Then I would think that probably if we break 1380 and hold below that for more than a half hour or so, we're likely to test 1330 to 1350. I would think that would be the key level to hold. Let's take a look at the at gold real quick. Gold has rallied up. People were talking about it, and I said, and a lot of stocks look like this as well, that they've kind of consolidated a little bit. They, create a little bit of resistance, maybe a little cup and handle, and now they've kind of made it up to the target of where they should, where a rally or a little squeeze would lead to. Maybe it goes and fills this gap, but I still think that the gold needs to consolidate further before it's capable of a much bigger move. And the U.S. dollar has gotten smoked. I mean, this thing was looking good with a rising 10-day moving average. It failed to hold the 20. It failed to hold the 50. And this is why moving averages are, like I always say, just where we want to look closer at the action and say, does the market give us an opportunity in here? And the opportunity, so this is basically where that 50-day moving average was. At that point, when the market came down and traded these days in here, well, what we didn't see happen was that the market didn't make a higher high. It was trying to consolidate in here, but it didn't show that momentum. And what we would have wanted to see for a turnaround would have been something more like this. And then that 5-day moving average would curl up underneath and follow it. But obviously that didn't occur. I'm just trying to, point out the way we would have liked to have seen it. But the U.S. dollar came up into this prior heavy support level. Spent some time in there but was rejected, and now is heading back down towards the bottom end of the range. I don't trade the dollar, but it's interesting to look at, and that'll do it. Hope everyone has a good weekend. Thanks for tuning in.